Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, making professional trading simple. All right, we just talked about staying short. For those of you that stayed short, had some more bearish action today. Now, at the end of the day, what do we get? Yes, we got another run up, and of course, I'm sure everybody's anxious to jump on the bull bandwagon, but guess what? Nothing's broken from the bear side quite yet. So, it was a very nice run up. If you are intraday trading, yes, there was great opportunities to make some cash during the course of the day. We had a very nice break right here around the 90, well, let's call it 99.30 area. And that gave us a nice little 100-point run up here. But look where we ended up. I mean, step back, look at the bigger picture. Nothing's broken. So we still have to get up and above these moving averages. Will this attempt do it? Actually, yeah. Actually, I'm not so sure that we won't actually start to move up from here. Is it the big bounce, quote unquote, that everybody will probably expect? I'm not convinced of that yet. I'm not so sure it's not one of those little four waves that go up to about here and then roll over and go back down again to make one more last low and, psych everybody out. So that's ultimately kind of how I'm playing it to start. But I'm just going to tell you, watch these overhead resistance areas, starting with the 20-period moving average. Look how nicely it held in here. Look how nicely it held at the end of the day. Totally makes sense. Maybe we get a gap up tomorrow. That would be the quickest and easiest way for the bulls to make some headway here, would be a gap up in the morning. Why not? That would be, I think, very expected. Could be very expected considering we had, about an 18-point down gap to start the day. Yeah, quite a bit to the downside. From a daily standpoint here, look what we're putting in. A huge hammer candle. So obviously we're going up tomorrow. No, not necessarily. Always a potential reversal candle. Once again, I like where it's at. Yes, it's in a very good spot. Now it's definitely caught my attention considering where this particular hammer candle's at. Still need confirmation. And where's confirmation? Confirmation really consists of the 20 and the probably the 50-period moving averages on that 60-minute chart that we just looked at on the Dow. So over 10-100, I think could maybe take us back into the 10-200 area. You have to play it kind of short and sweet for the time being, maybe 100 points at a time here. But a bounce from, above 10-100 to 10-200 wouldn't be a big surprise. Neither would it be to see us retest this 200-day moving average. That would be obviously my overhead target areas on any move to the upside coming into tomorrow's trading. Tomorrow would be Wednesday, and I love Wednesday afternoons for my potential reversal time. So maybe we see it early in the morning, maybe late in the morning, whatever. But Wednesdays are a really good day and a pretty common day to see a lot of reversals happen. I'll be watching closely for it tomorrow. Here we have right back to this overhead resistance area on the NASDAQ. This is back to 1815. Still nothing really broke down here. Looking for more major moves. I would really be watching closely this 1840-ish area, especially over the 50-period moving average if you're looking to get long. Here we are again. Close below the 200, close above the 200, close above the 200. Not very powerful candle. Big gap down today, only to come right back up, close above the 200. Lots of indecision down here. There's a lot of work being done down here by the bulls and the bears. Both sides are really trying hard, especially on the NASDAQ, to hold this 200-day moving average. They just don't want to give it up. They might have made their stand today. Once again, looking for confirmation. Need that 1840-ish area to really give me some more commitment out of the bulls. Up and over 1840 on the NDX. From a weekly standpoint, still a little bit early. Notice how we did tag the 50. That was basically on the open today. Very logical place to gap down to. We tagged the 50, ran back up again. So coming into Wednesday, we're basically break even on the week so far. We'll wait and give it till Thursday to see where that candle starts to close. SPX on a 60-minute, look at this. Right back into overhead resistance. Still nothing broken from a from a bear standpoint. We've seen this a couple of times. Big run up towards the end of a day, coming right back into overhead resistance. This is the same thing. So yeah, it was a very nice day to trade. Could have made a little bit of money to the long side. Towards the end of the day, if you held overnight, you are really taking a chance here. Might pay off for you. might pay off for you in this one case. It's not a trade I would have taken myself, but it's your money. Trade it as you will. I'm just here to give you ideas on how to and where to look for particular entries. So here we are at the blue line. Love how that's holding. Anybody that thinks that TA is nothing but voodoo is obviously hasn't really done a lot of work on TA before. This is beautiful. Nice line that's holding here from yesterday. Getting up over 1080, especially 1090, is a big area for the bulls to hold. That would be another good place to get long. A more conservative place, if I may say, to get long would be right over this 1090 area. Make sure it's up and over the 50 period moving average on the 60-minute chart too before you start looking at it from that direction. SPX on a daily, putting in the big hammer candle here. This is definitely a hammer candle. What defines a hammer candle? Where the head has little to no wick on the top, and the head is at least, or the body, the wick, is at least 2 times the size of the head. So this is clearly, as we've seen on the other charts, a hammer candle today. But right back to what? Yeah, overhead resistance. So we're still looking for a more major break here, up and over this area to maybe solidify a bullish move, only in the short term though, guys. I'm not sold that this would be a big bounce that would take us back up into this 1150, 1170 area. I would only be looking at the 200-day moving average to start. That would be my first major level of overhead resistance on any of the indices that are now below the 200, which would be the Dow and the SPX. Here it is on a weekly, still staying above the 50-week, above the 50-week moving average, coming down here, tapping this nicely. Gee, what is this starting to look like? Oh, I don't know. Maybe a head and shoulders pattern on a weekly? Uh-oh, that can't be good. So we'll see if that plays itself out over the next few weeks. VIX on a daily, also screaming downwards, almost 10%. So confirming what we saw in the market with the move today. Coming back into still still up in the red area. Has not come back into the yellow area here. We haven't broken below that 30 area, so as long as it hangs out in here, that's still quite a bit of fear wandering around the markets. This is a weekly, so tomorrow could take it back up. Really depends on the direction of the market. However, if the market continues to bounce a little bit, watch for this to come back and retest this lower end right here on the VIX side of things. Important to note simply that today's big move down of 9% or so does show that fear is coming back out of the markets, and that will lead to higher prices in almost all cases. Apple on a 60-minute down $1.54 today after the big gap down. This thing just cannot find its footing right now. However, it has been relatively strong. I know you think I'm crazy, but it has been relatively strong compared to what the rest of the market